Longest it's ever taken to go live. Spinning. Showtime.
Not a good sign.
Oh, there we go. All right. You may have seen me just standing still for 10 seconds, y'all. I'm really sorry, but welcome. Come on in, everybody. Thursday, 2:01 Central PM, day after Tesla earnings. I'm joined by the great Alexandra Merz and Gary Black. Thank you both very much for joining me. It's about 24 hours, roughly 24 hours since Tesla came out with their earnings report. We had Gary on our live stream yesterday. Thank you very much, Gary, for joining us. And we had Ross and a host of other folks, Yashu, Nicholas, Matt, Bradford. We're supposed to have Alexandra as well, and we also had Ross. We're also supposed to have Alexandra as well, but I know Alexandra had some some things happen on our end from a technical standpoint, but that's completely fine. But we have her on today, so thank you both very much. And we'll kick off with Alexandra, since you were we wanted you on so badly yesterday, but we couldn't make it work. But that's completely fine. We'll use your face for the thumbnail anyway.
Exactly, abuse it. It's all good.
We didn't get your take yesterday about either the earnings report or the call. Maybe we'll start with you. Give us your thoughts on the report and the call, and then we'll head over to Gary, get his thoughts on the call, and then we'll just turn into conversation from there. So I'll give you the mic.
Thank you. I think it's actually good I had 24 hours to digest it, because initially I always seem to first see the bad, and then, it sort of sinks in. And then, the one thing I'm not a trader. I'm not an immediate analyst. I always need a bit of time to digest stuff. And I think I'm quite good once I have time to digest it. So I'm pleased I had that. We'll discuss in detail later, but I actually thought this wasn't a bad call at all. You remember I wanted Elon not to be on the call. I still would have preferred. But one thing, Farzad, you with all your insights into Tesla, you have to get their mics and their setup straightened out. This is the worst quality investor calls I've ever heard. This is the 5th largest company in the world striving to become number 1. Get the mics, set them up the way it should be.
Elon, hit me up. I'll send you some mics, bro.
Exactly. That's why I put it at the beginning, because he'll never listen an hour to me. But Rob, that was my mission of the day. Get them straightened out.
It would be my honor. My honor. I'll do it for free. I love to do it.
Yeah, you go. I sent the mics, and I'm sure Kathy jumps in as well to help me. Yeah. No problem. Perfect. But get this done. Because honestly, for me, it took time. I listened to it sometimes twice afterwards. Once I had the recording. There's stuff I still don't understand because it just hashed out and whatever, and that's a shame. That's just a shame. So I liked it. I liked it because stock buybacks are on the table. I liked it for a couple of other reasons. I'll let Gary jump in with his overall appreciation, and I think then we should hash it out line by line, right?
Sure.
Yeah. Go ahead, Gary. What are your thoughts?
So Tesla's down about 7% today. The market's down maybe a little less than 50 basis points. That's wrong. If you look at the earnings estimates, they came down about 2%. So I think a lot of this is just people worrying about Elon having to sell shares, basically fund Twitter. And, what we've heard today, and we've heard it from more than one person, that, they're actually going out trying to raise more third-party equity. If they can do it, they have about $7 billion in the deal. And Elon probably, we estimate Elon's got to cough up about another $5 billion or so, assuming he can't use margin. If they can raise more third-party equity, even though Elon said in a call yesterday he was overpaying for Twitter, then maybe he won't have to sell. And I think that's what's overhanging the stock. That's what we call the Twitter overhang. And again, it's very interesting that the analysts haven't really cut estimates all that much. So I find that a good sign. I think the earnings themselves were just kind of, they weren't great. They missed on automotive gross margin, which is next to volumes, probably the most important thing. They missed by about 3%. They were 26.8, and the street was looking for 27.7, so about 3% miss. And yet on the call, I actually thought the call was pretty good. Zach came out and said, and whether you believe him or not, they're going to be just under 50% year over year deliveries growth, which, if you say 47, 48, that's a much bigger number than what the street's looking at today. It's about 460, 470, maybe even 480. Street's about 430 after today. So that's potentially a big beat. And then I thought, some of the things they talked about on the call were good. And, they talked about semi, they talked about, 50,000 units by 2024. I think the surprise for me and the most positive thing was they were talking about the new, I call it the $30,000 EV. It's half price of the Y. whether it's called a robo taxi or not, doesn't matter. If it's going to be a $30,000 car, what they said, which again, believe them or not, it's going to have more volume than all the other units combined. That would be very positive. I mean, nobody really expects it to be that powerful. So I thought the call itself was better. And then, as Alexandra said, they definitely are leaning toward a buyback. They said we have to have the right process, which having been on the board before, 2 boards, you can't just put a buyback in place. You got to get approval. You got to go through the reasoning for it. You got to go through the IRR, and maybe they just didn't have time to do that. So I thought that was positive. So I think, the stock price, like I said, being down 6% when the revisions are down 2%, that's not right. So that's got to be the Twitter overhang. If they can close the Twitter overhang without Elon selling stock, that would be a home run. So let's see how that plays out next week.
So Elon can sell not earlier than tomorrow, right? It's the 2 days after the earnings call that they can't sell.
I don't know officially. That's my experience in past companies I've worked with that worked for, that when you own stock, and I've been a CEO before, you'd have to wait at least a day after the earnings. So if you put out earnings Wednesday afternoon, you got to give the market a day to figure it out. And then you could sell on Friday. Some companies, I know like Apple and Google and others, they make you wait till the following week. So,
I remember when I was working there, it was Monday. It was always the Monday after. Okay. That's when it opened up.
That's the maybe Monday. And look, I've gotten into, back and forth with some Twitter Uber bulls who say, well, he's just going to use margin. I don't know if he can use margin. And look, there was about 13 or 12 billion of margin in the original deal. Then they cut it to 6, then they cut it out. So there could be margin left, but people have to remember the stock price is down 42, 43% since then. And he sold between, he sold 2 tranches in April and August. He sold about 10% of his shares. So anyway you figure it, his margin capacity is about 50% of what it was. And again, I don't know how much of the margin capacity is. I know that Tesla has a rule. You can't have more than 25% of your Tesla value in margin. Mm-hmm. But I don't know where he's starting from. I do know that he's pledged now 57% of his shares, but who knows if he's taken anything out. So we don't know, but it sounds to me, again, when you've got people telling me that, the private wealth office is out trying to get people to put more money into Twitter, more third-party equity into Twitter. Yeah. That could happen. Other than Elon was on the call yesterday saying we're overpaying. So.
Yeah, but I mean, there will be people who just trust whatever he does and who will put money in. And I mean, I have heard, I haven't personally been approached, but I have heard of people getting deals. If they go in there, they may have first tranches of stalling and whatever. So it's only hearsay. I can't make sure that, this is really true or not. But there seem to be a couple of options on the table.
Yeah. So look, if Elon doesn't, I'll get to the bottom line. If he doesn't have to put any more money in, the stock could be, and if he were to go out and say that, I'm done selling, the stock could be up, 10% in a day. And I still believe that once the deal is done, assuming it gets done next Friday and there's no delays, the overhang lifts, assuming it gets done, and the stock could go up 5 to 10%. Now, that's not great given that it's down 45% since he bought or went to buy Twitter, but it's still better than where we are today if it goes up 5 or 10%. So.
Sure. We're going to take any of that. So let me get back to stock buyback. So why did I like that? First of all, I think that puts a lid for a long, long time on any stock issuance, because there are still people imagining stock issuance, and it could also actually limit now stock issuance for employee remunerations, right? I just think that they're now in a completely other logic. You probably have seen that they have now also a proposal for a cash incentive rather than a stock. You can still have the stock incentive, but it's second choice. So I do believe the whole stock issuance is off the table, which changes quite a lot of analyst projections who still had stock issuance as, more further dilutions as a scenario. Oh, that brings me actually to one thing I still wanted to say. Didn't you all think this was absolutely ridiculous that Martin Vieira had to put out a new analyst spreadsheet 2 days before, because there are some of these big head Wall Street analysts who didn't account correctly for the stock split? I mean, 3-1, they couldn't put that into their Excel spreadsheet. Didn't you think that was, the most ridiculous thing I've seen for a while?
Yeah, I wouldn't have done it that way. I would have just excluded those people that didn't do it, because I'm sure there weren't more than a couple. I wouldn't have republished that. I would have just taken them out and said, you screwed up and we're not going to include your numbers. And look, the analysts wouldn't have cared. That to me would have been better. But again, in hindsight, he had $1.09 estimate and it brought it down to $1. So in hindsight, knowing where we, ended up, maybe there was a reason for doing that. I don't know.
Yeah.
I would have done it that way. I agree with you. That was not something I've seen before.
Okay, good. Well, let's put there. So no more stock issuance. We're now on a path to a buyback. I guess we don't have any hope anymore for fourth quarter. It's rather 2023 now, right? I mean, maybe. I just feel the stock is so depressed now. It's a shame to not buy back at these levels. But if we wait another quarter or two, because Q4 we'll talk a bit later, is probably going to be much better than lots of analysts are anticipating. And by the time then we are in 2023, given that the basic idea seems to be approved, now can they still make it happen in Q4?
Look, they could, and maybe Elon's trying to manage expectations. They probably, if they're like most companies, they have a board meeting each month, and they'll have one in November, they'll have one in December. So it's possible they could still do the buyback in December. To your point, if I was, on the board, I would want them to be buying the stock when it's cheap. And right now it's very cheap. So to your point, if you get to January and you announce, let's just make up a number, 470,000 of deliveries and the street's at 430, stock is not going to be at 207. And maybe they're taking a long-term perspective and saying, which they should, even if we buy it at 240, if it's going to 500 or 550 or 600, it's still a steal. So I think, again, when you read read back the transcript, to your point, it's not always easy to understand what they were saying, but the transcript made it sound like they want to have a process. And it sounds like, maybe they presented to the board, they talked about it, but the board said, this something needs to be flushed out a little bit more. Because boards don't like being sued. If the stock went down a lot from here and they bought back a lot, maybe they would get sued. Who knows? I just think boards like process, even if they're friendly to Elon. And so I think that's probably why they didn't do it yesterday. And I could see it happening in the fourth quarter. To your point, it's better to buy it when it's cheap than when it's up at 250 or 260.
Yeah, and I tried to make this point. I just saw that in the comments as well. Last time they issued in December 2020, the stock was at the equivalent of today of 213, right? So I just think it would be a good sign to everybody saying, okay, we issued at 213, we're now buying back below 213 because we just think, that there's really an opportunity to be had. And I had addressed it via, I know you did a great letter and Leo did a lot of work on it as well, but I'd addressed some of my tweet to Martin saying, look, that's where we are, 213 to I think we were 204 that day. So I still hope that rings a bell. Hero and Martin seem to be, receptive to the idea of, at least from the feedback we're getting. So I'm still hopeful. And let me just jump in one thing that wasn't addressed yesterday, because I think Nick asked the question and then Ross answered it in a awkward way. That is that timing of S&P. Remember, Gary, we already discussed this one, how early that was. And I still believe it was that early because there's now some talk between, even if it's informal discussions between Tesla and S&P, which would allow a bond issuance in a organized manner. If we're talking now organized manner, which is a new thing for Tesla, right? But there we are. So I actually do also believe that Moody's can now upgrade, because Moody's, remember, had that stupid analogy that we needed more products. Well, the semi is obviously on its way. The 30,000 cost starting to be addressed. The Cyber truck was confirmed for next summer. So they could pretend doing a press release today or tomorrow saying, okay, we also upgrade, because they will upgrade. They will upgrade between now and January for sure. They just need to find a cute moment to not look too ridiculous to do it now.
How important is that, Alejandra, to see a non-split rating? So right now you got S&P with investment grade, triple B, which is really two levels above Moody's. How important is it to have them both on the same rating?
We always discussed how the ones that still need investment grade are the more conservative fund allocators, the ones that go through committees, the ones that, have to take this decision in a much slower manner than a hedge fund manager or how you manage your portfolio, whatever. They're just people that are fiduciary risk is higher. They have old standards and whatever. And in those old books, it was a double investment grade. That's what actually was the way Fitch could make money, because they typically jumped on rating companies that had not similar ratings by S&P and Moody's, so that Fitch could provide that second investment grade rating for those companies, and that's how they became the third rating agency in the market. So I do believe it would be good to have it, and we will have it. There is no doubt Moody's will upgrade, but because they are the analyst of Moody's, René Lipsch, we've all now got to know him. He's a follower. The analyst of S&P is much more knowledgeable and now seems to suddenly get it all. So Moody's can't just lay back and say, we're stubborn, we don't know this stock, and we're not going to talk about this issue. They will do it. Would it help if there is a bond issuance out there? Of course it would. But I mean, I hear when Elon says we've done such a great job of not having debt. Do we really need to get debt now? I mean, it wouldn't really ruin anything for them having a 5 billion loan outstanding, right? There's nothing, just absolutely nothing compared to their cash flow. So I'm still thinking that's a financial engineering decision rather than a political statement of being for or against debt. But if they want to do it or not do it, that doesn't matter to me.
Well, back to yesterday. So there was two things that I didn't mention. I don't think I mentioned when somebody asked me what was positive about it, and I couldn't come up with anything. There were two things. One you brought up was that the share creep that you always see at Tesla going from one quarter to next, there was none. It was basically flat quarter over quarter, which was very positive. And then the cash flow was much higher. I looked at what the street was looking for. It was 3.3 billion after all CapEx. That was bigger than my numbers, bigger than the street. So, back to your point, they really don't need the cash. But if they wanted to buy back stock and they wanted to do an accelerated buyback, which you see a lot of those, that's when you'd issue some debt, right? Exactly. So, and we don't know. We maybe Elon and Zach wanted to get it approved before the quarter. Who knows? And so S&P was asked to move early because they probably got paid something to do a review, and it just didn't happen because the board said we need more process. So that's back to your question. Could it happen in November, December? Absolutely. And it wouldn't surprise me, to put it all together, to see, say, a $5 billion bond offering to do an accelerated buyback rather than do it over, say, a year.
Exactly. I agree with that. Yeah, I agree with you. And I also think a side effect of all that would be that institutional investors that have been conservative on Tesla would maybe first enter into the bond. When you know how these people act, it has to go through credit committees. It has to be, the whole analysis. It's the same analysis for bond issuance. If they can get what's today's 10-year rate, 4% plus 2% spread, if they can get a 6% bond on Tesla being BBB rated, that may be their first step getting into the name, feeling comfortable about it, and afterwards buying the stock.
Yeah. Maybe a technical question on the buyback sort of mechanic that Tesla is going to be putting forward. So as I think about the dilution, say in the next, maybe this is a tough question to answer, but say 3 to 5 years, maybe through 2030, should I think about that dilution? Should I just assume that the shares once the buyback is in place, that the shares basically stay static? So when I'm trying to come up with it, it's going to go down over time.
Yes.
It's going to go down.
That's what we want. And that's why we want, we want this pizza to be the same size, but our stake in it being a little bit bigger.
I just thought with Tesla sort of issuing the shares every quarter, for compensation or whatever, and then with the buyback mechanic being in place, that they somehow would even out. But I guess we're saying that the buyback theoretically should really reverse dilution, and then we each get a bigger piece of the pie. So it would be one of the optimal sort of outcomes from this buyback, correct?
Which brings me to one of the Reuters press releases of this morning, which drives me crazy. I mean, I see Reuters read, but the press release was that there's now one of those activist groups that want to link the future compensation package of Elon, because we've come to the end of this one, to ESG goals, which obviously just drives me absolutely crazy for 50 reasons, right? But the one thing where they're right is there is a new compensation package to be discussed. And that, so the whole question is as well, because he had so big chunks of it and he deserves so big chunks of it. That's not my point. How does that all filter into buybacks? Because obviously his shares also improve, also get their little kick out of the stock buyback. But if there are massive number of new shares issued, how will that play in? And I have no answer to that question.
Mm-hmm. Are you surprised we haven't gotten a stock-based comp for Elon yet? Because he should be hitting his goals by the end of this quarter, right? Shouldn't we see something from the board soon?
Yeah, well,
how's that going to impact the stock too? I'm curious.
Yeah, there are about 9 billion to be allocated, which is funny, which is about the amount, we're talking about Twitter. So you just wonder, because we got to those goals and there was no question yesterday about it and no news about it. So yes, I actually had a very, go ahead, because you know that better than me.
No, we'll see it in the 10Q. I mean, if they awarded him more. I don't remember if they've ever pre-announced it, but it's always in the 10Q.
And when is the 10Q out? In 2 weeks?
Usually within a couple days. Usually within 2 or 3 days, maybe Monday, or it could be out tomorrow.
Well, that would be a good, because if he gets now 9 billion more, that was so increases the stock count again, but he has more stock to sell, whatever.
Okay.
Yeah.
So we'll see. In theory, his margin capacity goes up, and in theory, then he has more that he can borrow from whoever is holding his stock. And again, I don't want to count on that. I know a lot of the bulls, the super bulls, are counting on that. But he going back to the call yesterday, he acted. I mean, he was pumping the stock. He kept on talking about
Gary.
all these things.
Yeah.
And I don't usually hear CEOs do that. So to me, it's kind of like he was trying to at least get the stock up a little bit, so that if he had to sell stock, if he wasn't going to be successful at raising new equity, he at least wouldn't be selling it at terrible price. But he is selling it at a terrible price at 206. Who among us would have said it was 206? In April when he went after Twitter, it was 1145 divided by 3, so it was like $380. It's down by almost half, which is crazy.
Yeah. And that was the basis of his offer, right? And he knew he had the liquidity associated with that price. Ugh.
And he sold, this is pre-split. He sold, I want to say 17.6 million. So let's call it 53 million shares, in today's share count, at 870, so almost $300 a share. He sold a tranche in April, and then he sold another tranche in August. So look, if I'm him, and he's been pretty good at, when he has sold, he's sold it pretty well. I wouldn't want to sell at 206. I'd much rather, get more third-party equity or try to get a margin loan on it if I could. I just don't know if he's got that capacity at this point.
Okay. So let's get back to production versus delivery, just because, I hear you all the time saying Wall Street doesn't care about production, they care about delivery. And yesterday we heard all this talk about we have to smoothen out. It won't be the quarter end pushes. I actually think there will be a quarter end push for Q4, but we'll see. And so what are your expectations for Q4? Do you think this whole warehousing and then having more inventory is really happening? Is that a good thing? Is that a bad thing?
Well, we've heard that before. We've heard that they've talked about getting out of this, quarter end delivery wave. And, we knew the numbers they gave yesterday. You said 2/3 goes out in the last month of the quarter. Zach said this, and 1/3 goes out in the last 2 weeks. We knew that. I used to have debates with, David Einhorn about this, because he always thought that they were, channel stuffing, for lack of a better word. And it's just the way it works, right? You got these orders, you're trying to get them out by the end of the quarter. And, so as you try to take that away and smooth it out, to your point, and it looks like they're just doing it in Europe and China so far. So you got to load them on the boats and you try to smooth out delivery so you don't have that big push on the last month. I don't know. They may chicken out. They may say, we need to, again, hit our numbers as we get to the end of the fourth quarter, especially given that they laid out a goal. And Zach laid it out, and Zach's actually got the credibility saying we can get to just under 50% growth year over year, which I'm not sure why the market didn't pay attention to that. That's an important number if people believe it, because the street is not believing. The street's at 430 today, maybe 428. And, if you look at like Adam Jonas, who's their banker, Morgan Stanley, and there is a Chinese wall between banking and research, he's at 400 for the fourth quarter. So he's down with Troy. I would bet most of the buy side is probably around 400. So if they, want to deliver 460, 480, you're right. They may have another fourth quarter delivery push, and then what's offsetting that though is you got in the US, you got the EV credit. So you got a lot of people who are in line right now that would probably rather wait until January 1st, because again, if they qualify, they can get an additional $7,500. So I'm interested to see what they offer people. And again, I told the story yesterday. I had a friend of mine who's got money. He's in our business, and he's talking about whether or not he should wait. And I said to him, you're not going to qualify for it anyway. So what do you care? so he went back and he was trying to negotiate that he would get something if he took delivery now. And I don't know if he got anything. So I think the delivery wave is a good thing to have. I mean, it's a good thing to get rid of, to smooth it out. I just don't know if they're going to be successful at it. It's hard to get rid of it.
Did you see that news about that huge warehouse in Illinois that they're trying to, or did purchase or rent?
I don't know what that is. I don't even know where it is.
Exactly. And that brings me to actually one question, and I may not have heard it all. I tried to listen to it twice, but they didn't announce any new factory, right? They didn't announce, this wasn't this supposed to be the call? We weren't supposed to have end of the year all this news about new expansions, China, America, Canada, I don't know what.
We haven't had it yet. And so people say the UK is a spot that you might have a new factory, Canada, and in some place in the eastern United States. I don't know if Illinois, is eastern United States. To me, it's the Midwest. To me, it's not that different from being in Austin. If you're going to do eastern United States, you go to Pennsylvania, you go to, some lower tax state.
But wouldn't Illinois be a good warehouse for Canada if they do? I mean, I'm really bad in geography.
I don't think this is for cars. I think this is for parts. I think this is for service.
I don't think. Yeah, I don't think this is the factory that they're talking about. But that is a catalyst that once they announce a new gigafactory, I think some people will be relieved, because it's very hard to get to Elon's number. If he's saying 20 million units by 2030, unless he really starts building up, at least one gigafactory every 2 years, and he has to announce something soon, because look, Berlin and Austin have now been in existence for, a year and a half, a year, let's call it. Aren't
you both surprised? I mean, Farzad knows it inside much more. Aren't you both surprised by what I feel relatively slow ramp of Berlin and Austin? I mean, I don't want to say anything negative, but I was actually surprised we're only at 2,000 cars a week now.
Yeah, we got spoiled by China, because China was within 10, 11 months, it was pretty much, it wasn't fully up ramp, but it was doing very, very well. I'd say better than both of these are. I don't know if it has to do with the 4680. First they were going to use 4680, then they weren't. I don't know if that's the reason, or it's just been a slow ramp. But China we got spoiled by China.
Yeah, I think it's slow within the context of Tesla. I think within any other manufacturer, I think Berlin and Austin are probably ramping at a decent pace, but because of China, to Gary's point, that was so mind-blowingly fast. It really just talks to, Elon, I think, brought it up multiple times on calls where he was just so impressed by the Chinese team, and now we know why. It's because they're able to get China to that level. What I have been a little bit surprised by is I did think Austin would be beyond where Berlin has been right now. I am surprised by Berlin being ahead, because there's usually a lot more regulations around labor laws and how many hours you can spend in the factory and more bureaucracy. And the fact that factory has been quote unquote outperforming Austin to this point. I mean, maybe they're like, because Austin did open a little bit later, so maybe they're like at the same level if you sort of like timeline adjust. But I just think Gary's point is the right one, is that we were spoiled by China, and maybe Austin and Berlin is what we should expect. But I am curious to see, as Austin really gets to sort of full ramp, once they get to hopefully 1 million cars per year in the next couple of years or longer, what does that sort of S-curve look like? Because then we can use that to sort of maybe extrapolate the new gigafactory that's going to be announced hopefully in the next couple of months here. And it'll be a useful data point, because I don't think Shanghai is going to be, it appears to have been just an outlier as far as how to ramp. And then you also have to think about, I think Shanghai was also at a time where Tesla needed to get that ramp up because they wanted to start generating that cash. So now that they have that cushion, and maybe from a financial perspective, there isn't that sort of like do or die attitude from we have to get this thing up right now. Otherwise, we're not going to be able to justify our stock price, and we're all going to be really sad. And, we might go bankrupt, who knows, in the long term. So, I just think there was maybe a different level of fire behind that factory versus these. And these are
I hear you. I just wonder whether, now launching in Austin, obviously a Cybertruck, because if they want to deliver in next summer, it has to get into place now. I just wonder if they have, the ramp concluded in Austin for the Y by then, because then they want to start straight away the 30,000 or whatever it's going to be called car. I feel that there's a lot happening, given that the Y isn't fully ramped in both Berlin and Austin. But I may be just impatient. I grant you that.
Well, look, let's remember the environment we're in. You've got still a lot of supply shortages. When you hear GM and Ford, they're not making all the cars that they can make because of these supply shortages. And again, I think Tesla's weathered that storm pretty well. I'd give it another couple quarters. And the second point I'm making, this is a very important point. So they missed on auto gross margin. And Zach said on the call, if you back out Berlin and Austin, so you just look at gross margin of Shanghai and Fremont, it was pretty near 30%. So people should be using that number, 30%, as they forecast at least into next year. And the street is not. The street's using like 29. I looked this morning. So that's an upside if they can just get the thing ramped up the way they should. And it looks like they're I wouldn't call it accelerating, but it looks like they're getting closer to where they should be. And so I would give it another couple corners. I'm not worried about it at this point.
Okay.
I did highlight this comment too from Hans. Shanghai also didn't ramp up through COVID supply chain disruptions, and Gary, you also mentioned, so that's very, very true. And who knows? Maybe once those things get alleviated fully, then we might see a quarter.
It might be at 5,000. I think that was the original target, was to be at 5,000 a week by the end of the year, and they still may get there. I don't know. That would be wishful thinking.
Sure, we're only October. No doubt about it. So how did you take the news? Go ahead.
Sorry, just one quick one, just on the margin question. So, and around that cheaper car, that $30,000 car, or whatever, how do you think about margin for that platform, or is it too soon to think about? I don't know if that's where you're going, Alexandra, but that's sort of my question that's coming up now, because I'm trying to think, okay, once this thing is out, it's 50% less cost, theoretically 50% less price, or some proportion of that. Should we still expect the same level of margins for that vehicle, or are you thinking about modeling that differently for your next few years, Gary? How do you think about that?
Yeah, well, as well. And again, so one of the negatives of yesterday was the average ASP, average selling price, dropped, and I can't really. And I inputted everything into my model, and I still can't figure out why. But I could venture a guess that it was China volumes were higher as a percentage, and we know that China prices are lower than they are in the United States. So right now, the average ASP ex red credits about 53.5, and that's down from 56 in the second quarter. And we know that we'll call it the gross profit ex red credits about 15, so it's about $38,000 cost on average. So if we're going to have let's call it a $35,000 car, in order to get even close to, the same gross margins, you're going to really have to bring the cost down to about, let's call it, 24, 25, 26. And so that's something, hopefully, as they're working on, this new platform, they're really focused on it. And they probably, that's why they're saying they're not going to introduce it till 2024 at the minimum. So I think they can get there, and I think it's going to be huge. And we haven't seen any pictures of it other than some journalists have come up with renderings. But if they can produce a $30,000 to $35,000 Tesla with, let's call it, even 250 miles of range and 0 to 60 in say 5 seconds, I believe them that could be more than all the other models combined. And it's going to mostly cannibalize Model 3, obviously. It's not going to cannibalize SX. It probably won't even cannibalize Y. But it will be huge, and nobody's expecting the volumes, at least on the street, to be that huge, where it's more than all the other ones combined. So
Yeah.
they got to work on cost is the bottom line.
Yeah, I agree with you. It reminds me so much when I was young, the Beetle came out from Volkswagen and really had this worldwide success of becoming, the small car everywhere, and they were able to produce it at such a high margin everywhere in the world. Actually, they produce it in Brazil, they produce it in Asia, everywhere. And I do believe that's what's going to happen with the new car. But I agree with you. The big question is actually the margin, because if they want to keep everything running at a 30% automobile gross margin, that is going to be a hefty one for a small model. And it was actually a discussion a couple of weeks ago on Twitter, and I remember Leo saying, don't even go into that segment, leave that to competitors and concentrate on the higher one. But you're completely right, Gary, that's where the volume will come from. That is just going to be the success story. Nobody will be able to compete with that one. There's no Bolt out there, or no French electric car or anything, or even the Chinese that are going to compete with that car.
Especially at any sort of margins that would make sense. It would have to sell at
BYD's got $30,000 to $35,000 cars, and they're
but no margin.
No, but their margins are not 26, 27%. You're right. They're more like 10. But that's why I keep going back to the math. If today you're at a 53 ASP, no, and you're making 15, that's 38. You got to get, in order to be, again, roughly, let's call it 30% margin on a $35,000 car, that's $10,000, means you got to get your cost down to 25, right? Mm-hmm. And this is where the engineers could help. I'm not sure how you do that, but I'm sure there's a lot in the battery. I'm sure, the manufacturing process is going to be much more simpler than the way it is today.
And where you manufacture, right? Because we haven't heard about the expansion in China either. That was on the table for a couple of months now. Where will they manufacture that car? Mm-hmm.
That's where you put it. You're not going to put it in U.S.
And not in Berlin either. I can tell you that.
No. So, but I do think it's going to happen. And I do think it'll be a big catalyst, but I don't think you're going to see it till at least 2024. I think 2023 is about Cybertruck, and that's going to be huge. It's going to be like Model Y because it doesn't really cannibalize your base business. So if they can get it up and running and get 100, 150,000 units, you're not going to lose any volume from 3 or Y. Cybertruck's a whole different form factor. It's about 20% of the market. And again, I remember when Model Y came out and all the bears were saying, well, it's just going to cannibalize Model 3. And I would get into these arguments where I say, no, it's a different category. It's an SUV or small SUV versus a sedan. And it's the same thing with Cybertruck. It is so different than anything else out there. And that should be, remember, we did a poll actually about a year ago. What should be their highest priority? That should be Tesla's highest priority right now, is getting that Cybertruck out there.
Do you, in your models, do you quantify Cybertruck for next year?
Yeah. I put about 50,000 units in. 50. I mean, the street, I could look at it. You guys want to talk and see where the street is, but I think it's, hold on. I'll see if I can find what the street's looking for.
No problem.
The street in 2023, it's probably less than me. And again, the problem with Cybertruck, it keeps getting delayed. Okay. Yeah, the street's at right now, consensus is 52 for next year.
Okay, so it's about the same than you.
Right in line.
Yeah. But that's like, like people were saying semi, why don't you ever talk about semi? And the reason is it's tiny. I mean, relative to everything else. I mean, 50,000's nothing to sneeze at. If they charge $200,000 per semi, that's 10 billion. That's a big number. But here's the problem. Yeah. So the street has it in their 2024 numbers. And again, why is the stock not up on stuff like this? For 2024, now here, this is interesting. 2024, the street's only looking for 7,000 units of semi, right? That's it.
It'll be more than that, sure. Mm-hmm.
Well, if it's more than that. Again, we're talking 2 years away, and I would still prefer that Cybertruck come out before the semi because it's got a much bigger TAM.
Clear.
Yeah.
I like $200,000 a truck. That's beautiful, and I'm sure the margin's going to be huge, but it's still, the Cybertruck market is 20% of the U.S. market and probably 20% of the global market. So it's a huge TAM.
Yeah.
So, but you do still think we can have announcements of new giga locations and all that during this fourth quarter, or you think this is all now beginning of 2023?
No, I think, look, that's of all the objectives, the buyback, Cybertruck, that's the easiest one. You pick a spot, you negotiate it and you go forward with it. I'm sure they've been working on it. And there's already been leaks about Canada, and the UK. I just don't know which one of those is in first. I would love it if they had two of them. And, let's go back to the buyback question, because I think people get confused about this. Buybacks are after all gigafactories. So if you were to run out of money, let's just suppose that you were to build 4 gigafactories in 1 year, and therefore you couldn't do a buyback, I'd be thrilled, because the highest IRR is on a gigafactory.
Sure.
It's not the buyback. The buyback is once you've got all this cash coming in after you've satisfied all the growth initiatives from the bot, from robo-taxis, from Cybertruck, whatever, there's all this cash that's left over. It can only go into 5 different things. It can build up cash, it can pay down debt, maybe dividends, acquisitions, or buybacks. Those are the only 5 things you can use it for. And so you got to say, okay, if you got this cash, which is now 21 billion, and next year it'll grow at 20 billion, right? Grew at 3.3 in this quarter. What are you going to do with all that cash? You can't just let it build up in cash at 4%. That's crazy. I mean, shareholders would have not a revolt, but they would be like, well, why are you doing that? Why don't you just give it back to me? And so I keep saying, of all those things, you can make acquisitions, and if most acquisitions don't work, but if you can find an acquisition that increases your vertical integration, like lithium mines or something like that, that would be good. As long as it's not too out of character and too expensive. And I think that most investors would respond favorably to that. But to buy, like, let's suppose Elon, instead of doing it himself, said we're going to use Tesla cash to buy Twitter. People like me would have just given up. We just would say that has nothing to do with anything. And so, like, when it was good that he had the conversation about the the X umbrella, which he said, look, there's not much overlap. I was very pleased to hear that, because that's the way I think about it. As an institutional investor, you don't want to see Boring Company and SpaceX and Neuralink put together with Tesla, because they all lose money. And then I don't know what kind of multiple to put on something. And I would much rather keep that stuff separate. And I'd rather him keep Twitter separate, because Twitter EBITDA is probably going to be less than $1 billion next year. The interest expense is $1.3 billion. They're losing a lot of people, which is good and it's bad. It's good because they need to cut costs, but it's bad because there's probably some revenue attached to it. And at the end of the day, I just think it's going to be more of a mess than people imagine once he finally gets a hold of it. So.
Well, a mess. And do you also worry about the distraction, like Elon being more focused on Twitter, or you think he just puts now new people in there and just supervises from far?
He'll put a CEO in there, but it may be a thankless job, right? You put, somebody who is a strong leader, because, a strong leader is going to be attracted to it. And look, strong leaders are attracted to Elon, and, the ability to work with one of the, geniuses of the world, the Thomas Edison, Steve Jobs of our generation, a lot of people find that attractive, and I'm sure Elon will give him a ton of equity. So he'll attract a good person. The question is, can that person work for Elon when Elon wants to get involved and say you should do this, that, and the other thing? And I just keep going back to, people say, well, why are you so against Twitter? It's not that I'm against Twitter. I just want him focused on where his skill set is. He's an engineer. He's a product guy. He's a tech guy. And to me, Twitter's an advertising business. And here's a guy who hates advertising. He loathes it. And so I get that, he can use Twitter as his platform. But when he talks about Twitter, he talks about converting the model to fee-based. And look, as a user of Twitter, and we, I have a lot of followers. It's very hard to get people to pay fees. We
super follow you. We pay $5 to super follow you.
I'm about to plug your Twitter right now. Here we go.
It's a tiny number. It's a tiny.
Go follow this guy.
Well, maybe it's a tiny number, but I do believe people are prepared to pay for Twitter.
I'm just saying, as a percentage of revenue, it's tiny, and you're not going to get people to pay. Twitter Blue, super followers, all those things put together. It's never going to be a big number. It just isn't, because people are used to getting it for free. And look, I'm grateful for everybody who super follows me. I'm sure everybody who does Twitter Blue are very happy to get some money from it. I just don't think it's ever going to be a huge number. It's an advertising model. Yeah. If he could.
Well, we'll see. I mean, he has revolutionized different things. I think just adding payments to it is going to be the cash cow, right? If you get 3% of all payments that you, like Venmo does or whatever, that you filter through Twitter, that's going to be enormous, much bigger than anything else.
Yeah, look, it's funny. He threw that burnt hair perfume up there. First of all, is it for boys or girls? Do you know? Both.
I think it's unisex. Yeah.
It's for burnt hair, and we're wondering whether it's your hair that was burned.
Maybe. But, you know, he sold, what did he sell? 300,000 cases or something like that? Some big number?
30,000, I thought.
30,000 bottles.
30,000 sold.
You didn't buy one. I hear it clearly. You didn't order one. And I didn't either.
Yeah, but it's a big number. It's a big number. So if you know, he could show that it could be done, you know, everybody can sell stuff through Twitter, just like people sell stuff through Instagram today. I think it's great if he can do it. I guess I'm skeptical. I've followed Twitter for years. Don't like the stock, don't like the company, don't like the culture, and yet he's going to fix that. To your point, you know, he's going to have to bring in somebody who's really strong-willed, who can break a culture, change things, and do it without Elon getting too involved. Because if Elon gets too involved, the person says, what do you need me for?
I think he'll get some of the old PayPal band doing it, maybe even with Jack, because I do believe the main revenue driver will be the payments over Twitter, because people will use Twitter. I mean, honestly, I'm on Twitter hours per day, and I'm certainly not the normal, you know, not the right age range, not whatever. And people are spending so much time on Twitter where they just tweet but don't do anything else. And there's so much more that can be done on Twitter on which you can make money.
Yeah.
I still struggle.
Do you think your average, if they have 230,000 monetizable daily active users, how much do you think is a good target for Twitter to try to get from people like yourself per year?
It's not a question of how much would I pay to subscribe to Twitter, because I don't mind paying $5 or $10 being on Twitter, and even if I can pay a little bit more to have a blue check mark, I'd even pay a little bit more. That's not the thing. I would use Twitter for other things. For example, at the moment on Facebook, you can pay, right? You can send money left and right, and they make money on that. You can use Venmo for it. If you can suddenly do that with Twitter, for example, I have, not that I'm making any money off this, but I have a tip function because I'm not doing any YouTube or whatever. So people wanted to tip me. So I asked me, can you please put a Twitter tip up there? So I did. I got $120, $130 now. So I'm not getting rich on that one. As soon as I have enough, I'll buy one Tesla share. That's another joke. But anyway, but if that could be not linked to Venmo or something else, because Venmo is getting money out of that, right? Sure. When people tip me. And I just think there's so many other payment functions that could be linked there. The other one is YouTube. YouTube monetizes all the time. I mean, Farzad knows very well how much money he's making on YouTube, right? So if that can all be staying within Twitter, because we're all a Twitter crowd, we're on YouTube because that's the current platform for it. But if that can all stay on, you won't feel it, you don't pay it, but Farzad's money will come from Twitter rather than from YouTube.
That's how I think about Twitter's potential, is that I really think the multimedia aspect of that platform has been completely forgotten about, and it's just been sort of a platform for ideas. And that's where Elon's involvement and the team he's going to build around it is really going to be, you know, the way I think about it is when Elon builds something, it's always 5 or 10 steps ahead of the competition. So why wouldn't that be the case with a social media company? And again, it's a lot of like, hey, like let's trust that he's going to be able to do this. But if you look at every single industry that he's been taken a part of, it's always something about that product or service that's way different than everything else that makes it creates a separation. It's not just like, hey, this is just a car that you can go from point A to point B. It's a multimedia machine that's using a brand new propulsion, you know, method.
You put the finger on it.
You know,
that's it. That's it. Because he looks at the Facebook model. He sees the good thing into the, I mean, I hate Facebook, but there's stuff that they monetize very well. For example, the Facebook groups is really something where they can make huge money on. The second thing he looks at is YouTube. YouTube makes money, is a huge money machine. It's the biggest money machine now today in Google. And he takes all these aspects and brings them to Twitter. And it's not even that complicated because technology exists already. You just have to combine it here rather than let the users leave and now suddenly go to YouTube or to Facebook or whatever to do that stuff. There is really so much to be done. I can fully see it. And that's nothing that you as the user pay now. You currently pay it indirectly because you either pay YouTube Premium or you got the ads. But the same system can work here.
Right.
Okay. Well, let's see. I'm skeptical because all those examples you did, those are media business, ad business with people that grew up in the media business, whether it be social media or advertising, and that's what they live for. Elon doesn't live it. Elon's a technology guy.
He lived PayPal, and that's the same model.
That's fair. And look, and PayPal, maybe that'll pay the bills. I'm just saying he's starting with a business that is generating at best $500 to $600 million of free cash flow, your EBITDA less capex, and he's got interest expense of $1.3 billion, right? Where we are today. Now, we may hear in the next couple of days he's gotten enough third-party equity, he doesn't have to have that much debt. But he doesn't have that much room, or he's going to have to keep coughing up more money. That's all I'm bringing up. And I just look at his, and he said it yesterday on the call. He's an engineer. He's a technology guy. He loves products, but that's not necessarily what's going to build Twitter into what you're describing. To me, which brings me
to my daydream. Which brings me to my daydream that he puts a CEO in charge of Tesla so he can look only after what he's really loving to do. That would be my big dream.
Like that? You would really like if he was no longer involved with Tesla?
No. Involved, yes. The whole product development, the same thing that he does for SpaceX. Do you think SpaceX would work without Elon? Of course it doesn't. He's behind every new idea. He's there sorting them out. Of course, he will do the same for Tesla, but I don't want him to be burdened with that CEO function. I just think that CEO function is so out of it. And then he
hates
can,
it. He's been open about it.
He hates it. And I just think somebody a little bit more measured, less noise, whatever would do it, and he can then much freer act on everything.
More time on Twitter?
No, more time on stuff he loves, rather than having to.
Look, he does that. I'm telling you, a lot of institutions would not like that.
But I mean, do you tell us they hate him, and now you tell them they wouldn't like?
If they're in the stock, that means they believe in him. You know, he's a visionary. He's got great ideas. He's a great leader. He inspires people. Okay. But that doesn't mean that he should buy some things and try to fix them. I want him to focus on the EV business. That's why I own Tesla. I don't own Twitter. I don't want him to spend
the EV business. The EV business is up and running and doesn't need Elon on a day-to-day basis anymore. The EV business, the bot business, yes. And if we go to artificial intelligence, that is a major step where his input will be very. But even the bot business, I have the feeling this is really the team we saw on AI Day 2. I was really impressed. I do believe there is already a dynamic that's beyond him, and he actually intervened very little there. Did you notice how he just let them present and let them do it?
I don't think Tesla gets to this size unless they're like filled with rock stars, right? I think Elon's percentage of influence over time has become less and less. And although I think it's important to have him as the face of the company, I agree with Gary from that standpoint, is that it's important that he's still sort of the face, kind of like SpaceX is quote unquote run by Shotwell. But Elon's doing all the presentations, but Shotwell's doing all the day-to-day. If there's some sort of similar thing with Tesla, to me would be ideal. But I'm curious. So Gary, like say he does, say a new CEO gets announced next quarter, Q1 23. Does that change the way you think about the company, or is it more complex than that?
No, I don't know if we would get out because of that, but we would be very negative if he appointed somebody else to run Tesla. They will sell, if they're lucky, 1,000,004 units this year. We have them growing to about 10.8 million by 2030. He's telling people 20 million. Okay. And think about all the stuff that's going on. You've got all the competitors that were asleep at the switch for the last 5 years have suddenly said, okay, we need to put all of our resources behind EVs, and they're advertising, and they got PR machines, and they're spending tons and tons of money on R&D and CapEx. They've never had that.
And advertisement of cars that don't exist and probably will never exist. But go ahead,
maybe. But you've got more competition, and I would say better competition than you've ever had. And to have somebody who, and I can't see that person today within Tesla, to bring in somebody from the outside and say you're now going to run the organization, if that's what it's going to be, I think that would be very difficult for institutions to swallow. So I want him, because he is a great leader and he did create this from scratch. I want him to continue to run Tesla, the EV business, and find somebody really strong to run Twitter. And he could have, his say in it, and, they'll have a board, it'll be a private company. But I would much rather him do that than step down as CEO and let somebody else run Tesla.
But doesn't that contradict you? But doesn't it contradict your claim that there's a key man risk and you want a strong number two?
Yeah, bring in a number two, but he still stays number one. I have no problem. I can't even tell you
But
who.
he will be number one even if he doesn't is called CEO. Look at SpaceX; he's number one and he's not the CEO.
Yeah, I get that, but I would argue that in his wealth, the EV business called Tesla is far more important than SpaceX right now. I mean, it's a bigger part of his wealth, and he's got a strong team that's running SpaceX. I grant you that, but I just want him to continue to run Tesla, the EV business, during this very, very competitive time. And maybe in 3 to 4 years, he'll have Cybertruck out. He'll have the $30,000 car out. Full self-driving will be out there. Maybe the bot will be out there. Then I think he get. But there's just so much going on right now at Tesla. I just think today would be the wrong time for him to step down. But bringing in a number two, that would be great. More resources for the team. He just doesn't have that today.
Well, I think we're not that far off, because what you want is a number two, and what I want is somebody doing the admin stuff. So that could probably be the same solution, right?
I don't view CEOs as doing admin. That's what they call a COO, a chief operating officer. They do a lot of the admin stuff. And Elon is the leader. He's the product guy. I think at some point, I think you've said this too, at some point they will find they have to advertise. At some point they're going to have PR. So the marketing machine, he's very good at that stuff. He just doesn't like it, but he's good at it. And the product innovation he's going to continue to drive. And you let some admin person, do the admin stuff. I think that's good. And that's what a COO does. That's what Tim Cook did for years. With Steve Jobs. And I'm surprised that Apple has done as well as it has with Tim Cook, but he probably learned a lot watching Tim Cook. And I think that the person, if they come in who's a really good number two, like Sheryl Sandberg was at Facebook, she could learn a lot from him. And then ultimately, if she's the person, could take over, in 4 or 5 years when a lot of this big stuff is already done. But you got to get Cybertruck out. You got to get self-driving mastered where it's not just level 2. And I'd be interested in what you guys thought about his comments yesterday about it, because the analyst kept going. Was it going to be level 4, level 5? And he wouldn't say yes. He just kept saying, well, when I drive, there's very few instances where I have to intervene, blah, blah, blah. Well, that's level 2. Are you going to get, that's very different from robotaxi where it drives itself. So the question is, when is that going to be mastered where it's a level 4, level 5 system where you can actually get regulatory approval? Because as you know, in most states, California being one of them, it has to be level 4, level 5 rated to be even given a license as a robotaxi.
Yeah.
And so we're not there yet. And that's a big thing that has to get done. The bots looks like a big thing that, he wants to work on. That's good. Cybertruck, the $30,000 car, and in the face of all this competition, that's a big job still.
So what I heard on the call was that this year he was confident that they'll have level 4 this year and for sure next year. Is what I heard on the call. I think I was quite confident he did, because it was somebody that was asking the question. I'll look it up after the call just to make sure.
The analyst was grilling him. The analyst said, so does that mean level 4, level 5? And he kept going back to qualitative. Well, it'll be able to drive itself.
I may have misheard, but I thought it was quite clear. But I'll go back and listen to it again. What was it? There was another thing I wanted to bring up, but I forgot. Alexandra, I'm not sure if I know you have a list of questions too, but I wasn't sure if there was
I still before we go to the macro elements and headwinds that may still, move the market as a whole, and Tesla being impacted by that. I still want to go back to your expectations now for fourth quarter in 2023. So you said your delivery is now 440, was that, or 435?
430. We're 430, which is about 43% year over year growth. And again, based on what Zach, who does have credibility, said last night, because he's viewed as conservative, when he said that, they could get to just under 50%, that means to me, Zach's thinking 470, 480, that would be 47, 48%, which is just under 50. Now, you have people like Adam Jonas at 400. Troy obviously is at 400. I think the whisper number among the buy side is about 400. So if they can do 470 or 460, that would be a huge beat if they can get there. And look, the good news about this is we get Tesla numbers every month. We could see registrations and figure out if they're on track or not. But yeah, I'm at 430 for fourth quarter.
And next year for 2 million or not up to?
No, I'm above 2 million. I'm at about 2.3, which is probably too high because the way I'm doing it is Berlin and Austin get, pretty ramped up. They'll announce that, there's an expansion in China. So if China's at, let's call it 1.1 today, it could be 1.3, 1.4, so I can get to 2.3 if I wanted to, but I'll probably have to take my numbers down. The street right now, I looked it up. The street's at about just under 2 million for next year.
Yeah, that's what I remember. You got your question, Fazet?
No, I just completely blanked on it.
But
I was just checking the market. Yeah, I just wanted to call it out because the market just closed. 207.28, down 6.65%, up 0.06 in the aftermarket. But I just wanted to bring it up just to make sure folks could see it. So it looks like the quarter three overhang kicked in today, and so I'm curious to see what the rest of the week brings. And once we do open on Monday, I am curious to see if Elon will. I think it'll be quite obvious that if Elon has to sell shares, we'll see it on Monday. This is kind of what I'm thinking, because every time there was the form that came out where Elon had sold shares, I mean, that previous day was a complete disaster. So I think it'll be quite obvious if that happens again on Monday, because I believe, I don't know if you all agree with this or not, but I believe sort of the hurt from the quarterly report is probably priced in by now, I would guess. And so any sort of big negative move downward, especially next week, my gut would tell me is related to Elon selling shares, but I don't know if you all agree with that or not.
5 billion is not that much, right? Do you consider this a lot, Gary?
No, it's 1% of float. So, the old rule of thumb would be if it's 1% of float and you're trying to do it in a day, you might lose 2%. When he sold shares in the past, it's been like 7-8 billion, usually over a day or two. And it's been, look, he does it. He lets Jared or the private wealth office sell it, which is crazy. That's not the way people usually sell shares. They usually call Morgan Stanley or Goldman, sell it as a block trade, and they work it down, and they do their own hedging. I don't know why he doesn't do that, and because everybody sees him when he's in there.
Because they want money for it, because they want to be paid for it.
Yeah, but you're taking a bigger hit because you're selling it at a worse price. So, he might have to pay them some fee, but it's tiny compared to the hit he's taken because he gets bad execution. Everybody can see when he's selling. And so I would rather pay the fee and have great execution than the way he's been doing it the last couple of times. So I agree with you, Farzad. I think if Monday is when the actual trading window opens, we'll see it first thing if he's selling. But I'm hopeful, and again, this is new news because I've heard from two people today that were approached by him about, do you want to invest in Twitter? Yeah. Maybe he can raise some assets. Maybe he can get some new third-party equity in there where he doesn't have to sell $5 billion. And $5 billion is kind of a weird number because what I did is I looked at the June quarter 10Q, which there was about 765 million shares, and I added all the RSUs. And a lot of people are leaving Twitter, so who knows if that RSU number is correct. And then I back out what Elon owns, which is about 73 million. And that leaves me with about 41 billion. And he's got the LBO debt. He's got the 15 billion he's already raised. He's got the third party commit. So that's how I come up with 5 billion. There are other people out there with numbers from 8 to 10 billion. And then there is also this talk about, well, should he have $13 billion of LBO debt? Because the interest expense on an LBO debt is 30%, 40% higher than it was. And Twitter's EBITDA has come down. And so there is talk that maybe he would try to get that LBO debt down to, say, 6 or something, just to give them more maneuvering room. And look, if I'm a third-party equity investor, I would probably be asking Elon to do that. I would want to get that debt down lower than where it is. So we just don't know what's going to happen between now and next Friday. I do believe they'll close the deal by Friday. Twitter stock's acting like it's going to get closed. So I think and we haven't heard anything from the banks that say that it's not going to happen. It's at 52.44. I can see Farzad, you're looking at it. Yeah. I just think, we don't know enough about what his margin balance is or, whether he can raise, to your point, Alexandra, if he could raise another $3 to $4 to $5 billion from third-party investors who just want to be invested with Elon because, he'll remember when, let's say, SpaceX goes public or something. I don't know.
Cool.
I mean, it just
Alex,
doesn't seem to me such a big. Sorry, just to finish this up,
No,
it just doesn't
please,
seem
yeah.
to me such a big amount to really think this is still overhanging. I mean, I would all be relieved if they would just come the tweet saying we're done, we're closing, and next Thursday this is it. I'm taking over. This is the new CEO of Twitter, and I mean, he actually said he wanted to be the first 6 month CEO. No, wasn't that in May or something like that?
Yeah, but again, you would hope that he's been interviewing people. Really,
I love it how you always hope.
I don't want him running Twitter. I just think
We heard that.
It's not why I invested in Tesla, so that he could run Twitter. You can't have 4 jobs forever. And I know he's done a great job with SpaceX and Neuralink and Boring, but if you put them on a chart, say which one of these is different. Twitter's different because Twitter's an ad business. The rest are engineering, technology driven, and Twitter is not that. Twitter is an ad business. 92% of the revenues come from ads, and yeah, he could get more fees and more payments and stuff like that, but it's still at heart an ad business. That's the core of what it does.
Whether he is the CEO of Twitter or not, this is gonna for a couple of weeks be windy, to say the least, because there will be Trump readmitted or Jay-Z readmitted or whatever. There'll be stuff happening that will always bring Elon up and maybe even. But I just wish people, the market would understand that not everything that happens on Twitter has any impact on Tesla. And that's the one message I really would like people to understand, that Tesla is executing now and much better than any competitor and nearly where they dreamt to be, close enough to really consider and give them the credit to it. But Farzad, you wanted to have some questions.
Yeah, no, I just wanted to double check and see if you had any other ones on your list you wanted to hit. I posed the thing in the comments, but the other one point that I want to make, and I know we have about 7 to 10 minutes left here, but what I'm curious to see is if we go into, say, this environment where the Fed rates are, I just want to close out my thoughts here. If the Fed rates continue going up and then we do hit a recessionary environment and then we have, call it the rest of the auto market, especially in the US, in Europe starts to suffer, and it becomes really, really obvious in their quarterly statements that, hey, these companies are not performing nearly as well as, say, a Tesla. Then you have a Tesla that has a lot of free cash flow generation to the future. They have buybacks. They have new products coming out. I wonder if there's going to be sort of this dynamic of flight to quote unquote safety to Tesla versus every other company in the industry. And I'm curious to see if that becomes a dynamic here that might appear. And again, this is just me sort of thinking in the future. It's just trying to extrapolate out. But and I don't know if you guys have any thoughts on that. But that's sort of what I'm curious to see if it starts sort of developing. Because if the statement of, hey, ICE cars are becoming it's clear that they're going out of favor, and everyone else is going into EVs, and the governments are heavily subsidizing EVs, it really becomes a question: are there companies out there that can capitalize on those incentives, and are they able to ramp quick enough? Because if they're not, the gap theoretically should begin to widen quite a bit, and then you'll have even a bigger differentiator between, call it a Tesla, and every other manufacturer, right? So I don't know.
Is that from a hypothesis that you think investors who would not buy Ford or GM, but they would buy Tesla? Is that your hypothesis?
Correct.
See, I don't know. I don't see that. It's a very different type of investor who buys Tesla versus Ford, GM, Stellantis, Volkswagen. Those stocks all trade at 5 to 6 times. The people who buy those are value investors. People who buy Tesla are growth investors, and they usually don't cross over. People who are growthy, they'll buy Rivian. They might buy Lucid, but they're not going to buy GM or Ford.
Even if they're generating, say, $30-40 billion in cash a year, it's still not considered value from that perspective.
It's a valuation issue. It's a valuation issue.
It's valuation.
Yeah.
Okay.
Tesla on street earnings for next year, is still trading at, let's call it 35 times. That's still viewed as pricey for your average value investor when they're paying 6 times, 7 times for Ford or GM. That'd be like David Einhorn, who I think he owns GM or maybe owns Ford. Would he suddenly buy Tesla? No. It's just not what he's going to do.
I do believe that you rather have people thinking the big growth story of Apple is over, let's switch to Tesla, than people upgrading is not even the right word, but I don't also believe that people that are going sectorial, like I'm in the auto, this is my 15% of the portfolio that's in the auto. Not sure they understand that, Tesla is not a car company and
so it's
will
more like
consider
a
it.
FANG, like the FANG folks will start potentially looking at Tesla. Okay,
yeah, even Amazon, Amazon obviously today may not hit the growth targets anymore, and then these people may come to Tesla. When I was working, I'm working on this letter to Warren Buffett. I'm not very far yet. I'm changing it 50 times already because I want to get it right. But one of the things that when I was looking at his portfolio, he has so much Apple now. He would be crazy not to take half that position and put it in Tesla because there's just so much more there. Will I get him ever to consider that? Because he still considers Tesla much too early in the cycle. But he came so late into Apple in 2016. How can you miss Apple up to 2016? It's just incredible.
No, makes sense.
Yeah, but you're right. The people who would go into Tesla are growth investors who, to your point, are not as enamored as they used to be with, let's say Google or Meta or other social media or, Apple or Nvidia, because it's becoming more commoditized. It'd be those people who are looking for somewhere to put their cash. It's not the guys in the value space.
And that brings me to a comment I just saw from Hans. They may buy a Tesla bond before they buy the Tesla stock.
Yeah, but they usually don't intersect either. The equity people and the bond people, surprisingly, unless they're running a balanced portfolio, a 60-40, they usually don't really interact that much. Usually they're in different departments. Like if you go to a T. Rowe Price, they may talk to each other, but equity people and bond people are just very different.
Yeah.
Like growth people and value people are really different.
Yep. I told you my old CEO said that value people bank on reversion to the mean. They just assume reversion to the mean, where growth people pray for no reversion to the mean.
Yeah,
that's very true. It's very true.
That's very helpful. I know we got a couple minutes here left. I might just be able to throw one question up here, but
go ahead.
Yeah, if I really appreciate everyone's. I know saw some super chats. Thank you all. I just wanted to prioritize the flow of the conversation. That's why I didn't bring them up, but I really appreciate y'all chipping in. A question from Tony: what do you think of Tesla starting a freight service to vertically integrate with the semi truck? And I think this is a very interesting question because while I was working at the company in the distribution network, I was dying to get my hands on a semi because one of our biggest bottlenecks was logistics. My God, if we could have our own drivers, and then start leveraging those. So what have you guys thought about that at all? Is that part of the equation for y'all? Is that something that you think about from a modeling perspective? Curious to hear your thoughts. Or is that just completely not part of the equation?
I don't think that using their own semis is going to solve the big problem. The big problem today is obviously the ships going from China to Europe. And I heard actually yesterday somebody explaining that these ships have to come back empty. They can't be used for anything else and then reload it again. So usually one ship can only do one trip per quarter. So if you really want to increase the number of cars that you bring from China to Europe or somewhere else, you just have to find these huge ships, and there are just not so many around anymore. Then I thought I was cute proposing to them that they should put it on the rail now, but then people are obviously more clever than me. They explained to me it's going through Russia, and you don't want to have hundreds and thousands of Teslas sitting on a train going through Russia these days, which is probably the right attitude. So the big problem, I don't think, is semis in America. I think the big problem is the ships out of China.
Got it.
I guess, look, the way I look at semi, it's a good product to have. It's even at 50,000 units per year, that's only 5% of revenue. And look, if they're going to vertically integrate, there's nothing wrong with buying into a freight company. It's not going to be a big number. So I guess I'm fine with it as opposed to them buying something totally unrelated, like a Twitter or something. So I guess it's okay. It's just, I can't get that excited because it's not that big a part of their business. That's all.
Got it.
Yeah.
And let's do one more kind of tied to the other sort of discussion. How do you think Tesla compares with Amazon, as Amazon is still trading at 100 trailing 12 months PE while Tesla is like 65?
I can't understand this. I can't. I don't know whether you have any explanation. I look at this and think this is crazy.
Yeah, well, and I don't look at trailing. Nobody looks at trailing 12-month numbers. So let's look forward. On street numbers, Amazon's trading at 48 times next year, and that's not even right because that's GAAP earnings. So people are looking for 324. So it's trading at about a little less than 40 times next year's earnings. And Tesla. On street numbers, hold on, It's probably 30-ish, right? Because it went down today. No, 30. Yeah. Streets at 580. So yeah, it's probably a little bit less than that. I don't like Amazon. I mean, Amazon to me has terrible service. I just find it's a terrible product. And you got Target and you got Walmart and everybody else that's kind of caught up with Amazon. So I've never been a fan of Amazon, and yet it hasn't cracked yet. And every quarter it seems like they reduce estimates for the following quarter. I just think at some point it's going to get nailed. It hasn't happened yet because the sales numbers keep coming down. I mean, people are looking for revenue growth. Just to kind of give you, for instance, it was 7 in first quarter, 7, right? Compared to Tesla, which is still putting up, big volume numbers. 7% in the second quarter. Street's looking for 15 in the third quarter because that's what they guided to. But it seems like every quarter they have to take their numbers down. So exactly. I'm not a fan of Amazon. I'd much rather own Tesla. And if they miss, that's going to be the type of investor who goes into Tesla. Amazon.
Yeah, makes sense. Okay, I think we're at time. Anything else from y'all? Any thoughts? Any comments? Closing thoughts? Anything?
Just if you find what we're saying is useful, I would appreciate if people help us out on FFND, straight on New York Stock Exchange, and I had to put that advertisement in.
Yeah, for sure.
And you did well, and you got all my endorsement. I mean, I got my money in FFND, so you watch out for my money, Gary.
We're trying. Today was not a good day because Tesla's our largest position. It was down 6.5%, but hopefully we'll get it back as the Twitter overhang lifts. And if anybody knows where that T-shirt is, somebody sent me a copy of a T-shirt which I thought was good. I can't find it. It had a little Tweety bird. It was blue, and they were holding 2 glasses of wine, and they had a big belly. And if anybody knows who sent that to me or has it, I would love to find out.
Yeah, let's find that Twitter bird.
Yes. I was trying so hard for the last, before we went on, I was trying so hard to find that damn, because I could have sworn it was in one of the tweets that was replied to, and I'm going through your replies and my replies. I'm like, I can't find this damn thing. So
it was the yellow bird, right? It wasn't the blue bird.
It may have been yellow, but it should be blue because Twitter's bird is blue.
Sure.
But I would make it blue if we were going to have a T-shirt or something.
Yeah. And then lastly, just a quick plug as well for Alexandra here. Alexandra, you can find her on Twitter at Tesla Boomer Mama. Definitely follow both Gary and Alexandra. Definitely check out FFND on the New York Stock Exchange, Gary's fund. And thank you both very much. A great, look, we just got a $50 super chat. Thanks.
There you go. You have to pay me dinner. You know that? You know that.
I'm creating this fund. I have an Alexandra fund. You're going to get a really nice steak dinner.
I like
There's going to be a lot of wine. Yeah. That's right. We're going to Applebee's, baby.
Gary, always generous.
Yes,
take care.
Right. Thank you, Gary. Thank you, Alexandra. Thank you, everybody. We'll see you on the next one. All right, everybody.
Thank you. Bye, guys.
And broadcast. Bye-bye.
Bye-bye.